You open an envelope from the IRS and see a balance that feels impossible. They claim you owe $28,000 for a year you never filed. This is a substitute for return, or SFR. When you miss a deadline, the IRS legally prepares a return using only third-party data. They apply zero deductions, dependents, or business expenses, and calculate at the highest tax rate, creating an artificially high balance. But this phantom return is not final. To fix it, you will assemble a specific three-part packet that legally replaces the IRS's math with your own. Your first step is identifying exactly where you are in the collection timeline. The notice code in the top right corner of your IRS letter dictates the urgency of your response. Notices CP59 and CP1515 are early reminders. At this stage, the IRS is simply alerting you that a required return is missing from their records. A CP2566 notice is the official SFR proposal. This starts a 30-day countdown for you to respond before the IRS formalizes their calculation. If that window closes, you receive a CP3219N, also known as a statutory notice of deficiency. This is a 90-day warning issued before the IRS begins asset collection or wage garnishments. Regardless of the code on your letter, the defense is the same. You must take control of the data to stop the automated collection machine. The fear of hunting down decade-old W-2s and 1099s often stops people from responding, but searching for ancient records is usually unnecessary. Under IRS Policy Statement 5133, the 6-year rule, the agency typically only requires the last 6 years of returns to bring a taxpayer back into full compliance. You can acquire the exact income records the IRS used to build the SFR by filing Form 4506T. On this form, check box 8 to request a wage and income transcript. This document provides a full list of every W-2 and 1099 reported under your Social Security number for that year. Securing this transcript flips the power dynamic. It allows you to build a defense using the exact same data the IRS is holding. The objective is to combine the data from that transcript with your actual legally allowed deductions. Avoid the common trap of filing a Form 1040X. Because the IRS filed the SFR and you did not file the original return, an amended 1040X will be rejected by their system. You must prepare an original Form 1040 for the specific missing tax year. At the very top of the form, write SFR replacement return in large, clear letters. This formatting tells the IRS processor to overwrite their default automated assessment with your accurate figures. Filing this properly labeled original document is the only legal mechanism that neutralizes the inflated debt created by the SFR. Correcting the tax balance is the priority, but the administrative late fees and interest will remain on the account. For taxpayers with a clean compliance history over the last 3 years, the first-time abatement option serves as a straightforward waiver for these penalties. If your filing was delayed by unavoidable life events, you can request relief through a reasonable cause statement. A strong reasonable cause letter must document 3 things: the specific event that prevented compliance, a clear timeline of that event, and supporting evidence like medical records or insurance claims. Documenting these criteria allows you to claim penalty relief as a matter of internal IRS procedure. Your final packet should contain the annotated original 1040, the supporting transcript data, and your penalty abatement request. Send the entire packet via certified mail to the specific address provided on your original IRS notice. Once the IRS processes this packet, the collection clock stops and the agency is legally required to recalculate your debt based on your actual records. You have now reclaimed your financial narrative from the IRS machine and transitioned back into a compliant taxpayer. For more guides on navigating tax compliance, subscribe and visit our